Hey everyone, welcome to this training webinar. Over the last couple of weeks, we've been discussing some different patterns and structures that we see on screen on charts. And so we've discussed about clusters and cluster formations. We've discussed about double tops, double bottoms, and trading the nose off of those structures. The structure that I want to look at today has been aptly named the FDF Hokey Pokey. It's been given that name because sometimes you see these structures and there's so many of them, you really kind of run out of words to describe them. And so I just refer to it as FDF Hokey Pokey. It's a structure which is quite a common structure. It appears on screen a lot. It appears across multiple time frames, but usually I'm looking out for it on an M5 chart. On an intraday basis, usually I'm working off of an M5, and so that tends to be the one where I notice the structure the most. Right now, we're going to follow the same process that we've done in the previous webinars, which is that what I'm going to do is that I'll outline the theory in terms of the price structure that we're looking for, and once we understand the price structure, then we want to understand what are the different possible outcomes when this structure exists, and once we understand what those outcomes are, what the possibilities are in terms of price behavior in and around that structure, then what that does, it gives us the ability to trade. Right now, before I actually go and reveal what that structure is, like I said, it shouldn't surprise you too much, but I do want to mention a couple of extra things, which is that often when we're looking at these structures, it's about interpretation, right? So this structure is not a hard structure. It's not something which is always going to give you a solid level, all right? But what it will allow you to do is to interpret what's happening on screen, right? And usually what we're trying to interpret is the price rising or is the price falling, right? So it's a pivotal structure, and if the price is above this level, is breaking through this level, then usually you're looking at a wave reversal, and if the base of the level is holding, then you're looking at trend continuation, right? So I think what that means will become a little bit clearer when we look at the screen. So what I'll do now is I'll just explain the structure. FDF, what it stands for, is a fall, diagonal fall. Hokey pokey because FDF doesn't sound good on its own, right? So the structure that we're looking at is that the price drops. Usually this will be quite a steep drop. It'll be a momentum move, and following that momentum move, what happens is that you get a diagonal move, right? Usually in a bit of a channel, and once we've got that channel, what happens is that the price continues to break down again with a fair bit of momentum. All right, so this is the structure which we're looking at. This is a structure which we call FDF Hokey Pokey. It's not an ordinary type of cluster, right? Rather, you've had a fall, you have the price move in a diagonal, or almost like a downward channel, and then the price falls again. Right now, you get different variations of this structure. Sometimes this structure will appear at the end of a wave, right? So you might find that the price here was a significant high, and then you had this fall, diagonal fall. Other times you'll find the structure appearing as part of mid wave, as part of a greater. It'll appear mid-wave and it's part of the greater structure which is appearing on the screen. But it really doesn't matter where it's appearing. What we're really looking for are just the three elements. We want to see a steep fall with momentum. We want to see that diagonal channeling move, and then after that we want to see another steep fall. All right, so once we see those components 1, 2, 3, what we've got is FDF hokey pokey. Right now, how to play this, how to interpret it. There are really there are 2 or 3 techniques that we use. First off, what we're looking for once we've had this structure established is oh, hang on. Sorry if I'm going a bit slow here. So here's our structure. What we do is we box the structure off in a similar fashion to boxing off the cluster. All right, and what we're looking at is for the base here to act as resistance when the price pulls back. Right, so we get price pulling back. We're looking for resistance there. All right, now is that going to hold every single time? No, it's not. Right, that sometimes you'll find it will hold, sometimes you'll find it won't. Right, so if that level is not holding as resistance, what happens is that the price makes its way through, right, to pretty much the top of the structure, and sometimes it'll even breach a little way through it. Okay, and then what will happen is that it will retrace to the base. Okay, so once it's retraced to the base, if we're going to get trend continuation, right, the resistance level here will hold, right, and it will hold fairly well. Sometimes you might get a small bit of an overthrow into the structure and then back out, right, and then you can expect trend continuation, right. If, however, the price makes its way through the structure and then retraces to the base, and in this instance you were looking for reversal here, so you would have been short, and you would have been looking for the level to hold as resistance. If the price has made its way through the structure to the top and retraces to the base, then usually, yeah, that level, that base is going to become a support resistance flip zone, and you can be looking for a long continuation wave, which will make its way higher, and it will go and make a higher high. All right, so this is the pattern that we're looking at, right? So you have full diagonal fall. When the price pulls back to the base, you're looking for that base to act as resistance. If it makes its way through to the top of the diagonal structure, then you would expect it to retrace back to the base, and where there was resistance, you're looking for that to turn support and for the price to break higher, right? So so that's what we have in terms of price behavior, how I've seen price behave around that particular structure. All right, it does have nuances, right? So one of the nuances that we have is to do with the positioning of this diagonal structure, right? So if we have full, if we have FDF, and then the price goes into cluster consolidation, and falls, when the price pulls back to this level, more than likely it's going to happen that the price will end up making its way through to the top of the diagonal structure, pulling back and breaking higher, right? So if we have this diagonal structure followed by further momentum pushes through clusters, when the price pulls back, if it makes its way through the diagonal structure, right, and it comes and gives that, you can be pretty much guaranteed that actually the price is going to make its way much higher, and usually it will make its way to the origin of that falling wave. All right, so and not only do we have a fairly good support entry, but as well we have an excellent target to the top side. If you see the price playing out like this, it is a very, very reliable structure to be trading. All right, so you see a fall, diagonal fall, Cluster fall, the price pulls back to the diagonal. Just the fact that the price pulled back to the diagonal actually is very, very significant. You wait for the price to make its way through, pulls back to the base, you take your entry going long, looking for the wave higher. All right, so I've described this structure, fall, diagonal, fall. You also have rise, diagonal, rise. All right, so when it's going the other way, but the way my mind works, usually I spot the falling pattern a lot easier than I'm spotting the rising pattern, right? But both apply equally, and the rules apply equally the same. All right. If you have fall, diagonal, fall, and you get a pullback, right? Then without that extra structure, right? So this is the kind of your kind of deadly structure. We've had fall, diagonal, fall, cluster fall. We know if the price is pulling back to the diagonal, we're getting wave reversal, gives us very good entry with a target. If you have fall, diagonal, fall, and the price is pulling back, the way that you would trade it is to fade that diagonal, right? So you take a third, I don't know, maybe you take a half a position or a third position at the base, looking to place another order at the top. And if the price makes it through the diagonal, when the price pulls back to the base, either you will close both orders taking profit on one of them, or you will close the lower order looking for continuation to the downside, depending on how the structure is working overall. All right, so hopefully that's the theory covered. It's a little bit of a more complicated structure than the ones that we're used to looking at. However, it is a common structure on charts, and it does allow you to give price movement interpretation, and that's the overall important thing, right? So if you see it on your chart, you just spot it, and it's a case of it's on your mind that, look, I've got this structure there. So what I'm expecting is for the price to work its way through, work its way back. I'm going to be looking for support at the top, at the bottom. If I'm looking for resistance, you know what to do in all of those instances, right? I'm going to share that. I'm just going to share that, and I'll post it actually. I think I'm going to end up posting this in the chat on the home site. You can pick it up from there later on. Okay, that's done. All right, let's turn towards the chart and see some of these structures. So first off, we're looking at Euro USD. We're looking at Euro USD on a H4, and the structure should be fairly obvious here. So what we see is we see quite a strong diagonal. We see quite a strong momentum move. The price rose, followed by diagonal movement, and then the price rose again. Right. So it's rise, diagonal, rise, and then the price broke higher. Right. That's the structure that we have. You can see I've got that boxed off, and what I'm going to do is I'm just going to extend that box now, and we can see what happened when price came back. When price came back into the zone. Okay, I didn't want to be doing that. I don't know why it's done it. We should have an outline going on, right? So let's have a look. Okay, so gave an outline. Let's try again. Okay, here we go. Right, so so this is the structure that we identified on the left-hand side. Right, that we had rise, diagonal, rise. When the price came back, if you look at that top level, right, you'll see we had you had some bounces going on there, right? So it wasn't exactly easy for the price to enter. Once the price entered that diagonal range, it made it to the bottom of the diagonal range, retraced to the top of the diagonal range, and now it's fallen. All right, so once we had identified that structure and we see the price approaching it, right, in terms of entry, if we were looking for a long, the first place that we'd be looking for a long is at the top of that range. The next place to be looking for a long is at the bottom of that range, and you can see how this played out, right? So what happened is that from this you would have had the possibility of one speculative trade looking for support at this level, which you could have been stopped on. You would have an opportunity for a deadly trade going long from the base of the diagonal, right? And as well, you would have an opportunity looking for a short swing at the top of that diagonal as well, right? So in this instance, like I mentioned, we see that if the price makes it through the diagonal, when it pulls back, right, then usually you're looking at trend reversal, right, and you're looking at the reversal of that wave structure, right? So possibility to pick off from that structure quite a few, couple of hundred pips going each way between 31 and 33. But remember, this is based on the H4 chart, which isn't something which you're going to see every day or be able to pick off every day. Okay. All right. Euro USD. Euro USD. I was preparing for this yesterday, and I was looking through charts and saying, okay, what am I going to use as an example? And as I was doing that, it was late yesterday afternoon. I was looking at the structure on Euro USD, and we had fall. We had the diagonal price movement followed by another fall, and the price pulled back to that diagonal area. In this case, it didn't make it all the way to the top, right? You should be able to see that it did spike halfway through, and then the price collapsed again, right? So so this is the kind of structure that we're looking for on the left-hand side, right? This is quite a small structure. The ones which we really want are the ones which carry on for a long time, right? So we want to see quite a big diagonal move, and those are the ones which are going to give us our best plays. I just want to mention quickly before I move on to the next chart a little bit of a nuance, right? So inside of this diagonal move, what does it look like? All right. Sometimes you will see that it consists of two falling clusters. Sometimes you will see it consists of three falling clusters. All right. Where you have three clusters falling, more often than not, it will give a little bit of a pullback before collapsing. Right. Where you have two clusters forming, it's more likely to collapse straight, right, without giving a pullback. I think once you start identifying the structure, what I've mentioned here will probably make a lot more sense, right? But inside of that diagonal, you tend to get it falling in clusters, right? So 1, 2, 3, 4, and usually if you've got three clusters falling, you get a pullback to the first before you get price collapsing and a resumption of that trend. Okay, so that's Euro USD 5 minutes. Okay, AUD USD, right? So AUD USD, we had a couple of very clean structures over the last 2 days. First off, and now we're looking at the M5, right? So we had rise, the price moved diagonally, and then you had the momentum break again. If we're boxing off this area, it'll allow you to see how things played out. Okay, so you can see that the whole of that diagonal area represents a significant SR block. When the price fell into that diagonal area, it made it to the base, and from the base it gave a retrace, and even it was able to break back out, right? So that trade there from the base of the diagonal would have been good. It would have netted you in the region of about 30 or 40 pips very, very comfortably. Just having isolated the fact that you had that diagonal on the left hand side would have allowed you to get into that trade, right? The next area that we're looking at here is fall, diagonal, and fall. And then you can see again we've had another diagonal and fall. Actually, that's not a diagonal; it's more like a cluster, right? But we've had continuing momentum to the downside. All right, so so this is a very interesting cluster for me. And if we mark that off, if I just box this off, you can see where the resistance came in, right? So the price pulled back to the diagonal, and it gave significant resistance off of that level, and we had continuation to the downside off of it, right? So so it might seem, just in case there's any confusion between what we're looking at here and when we're talking about trading clusters are usually small areas of consolidation, right? So you get consolidation, this is what we talk about in terms of boost, consolidate, boost, and the structure that we're looking at here is actually a diagonal, and usually it consists of 2, 3, 4 clusters in a confined structure falling together, right? So so that's what we're looking at in terms of the structure in AUD USD. You can see that on the M5. We also get the structure forming on an M1 sometimes. Not sometimes, in fact, you see it quite often. And again, it's tradable in exactly the same way. Although I would hold off from the M1 a little bit because usually, it's like a 10 pip range, 8 pip range, 12 pip range. If you're scalping and you want to be in and out for 3 or 4 pips or something, if you identify it, you're pretty much good to go, right? But otherwise, stay off the M1, stick to the M5. It is the more reliable time frame for this particular structure. Okay, looking at Euro GBP. Euro GBP is interesting. Why? Because I've identified a structure and the price hasn't reached there yet. All right, so this structure is of particular interest to me. The other reason it's interesting to me is because we had the price fall, we've had the diagonal, and we had the price fall again. We've gone into consolidation and the price fell again, right? So it'll be interesting to see here if the price pulls back to this diagonal area, and I wanted to keep this on chart because it's going to be live. It's going to be a live example. When the price pulls back, in the first instance, we're going to be looking for the base of that diagonal to act as resistance. If it fails as resistance and the price is able to make its way through, we'll be looking for resistance at the top of the diagonal, and if the price pulls back to the base, then we're going to be looking for the base area to turn support and actually for the price to break higher, right? So this is what we're going to be looking at on Euro GBP if the price is able to make this structure, right? That's the and that's the way we'd play it. Either in any case, the level is, we'll look at the level to be something which is pivotal, right? So if the block is able to hold the price, then you can expect the momentum to carry on to the downside. If the block can't contain the price, so in this case, for example, the top of that is at 84. If the price is breaking above 84, then you can assume that the price is going to end up breaking much higher. All right, that's the and that's the view which we're going to use in order to trade this particular diagonal pattern. So we can come back to that later in the day and see how it plays out, or maybe later in the week if the price reaches that level. But certainly this is a structure that you want to be very, very aware of on your charts. It takes place often enough, right? It's not it's not one of those which you're not going to see every day. If you're looking on the M5, if there's breakouts taking place, if there's momentum breaks taking place, it's a structure which should be relatively easy for you to identify. If you can identify it while it's forming, that's even better, right? If you spend enough time watching, you should be able to do that. Because in that instance, you'll be able to follow the momentum and possibly take 2 or 3 trades, knowing that that is the structure which is which is coming into play. Okay, guys, that's the FDF hokey pokey, fall diagonal fall. We also have the inverse of that, rise diagonal rise. Watch out for it on your charts. It does allow you to interpret what's going on and the direction that the price is going to be taking overall. And in the coming days and weeks, I'll start posting these structures on the watch list once they've been identified, and then we can see how they're playing out over the long term. Thanks for attending this morning, and I'll catch up with you all in the chat.